Welcome to this deep dive. Today, we're unpacking the 2024 annual report from WH Group.
That's right, the world's largest pork company. Huge global footprint.
Exactly. We'll be looking at their packaged meats, fresh pork, hog production, the whole picture.
And the goal is really to understand, what drove their performance last year.
And what it means going forward. We'll cover the business segments, key financials, and how they're planning to return value to shareholders.
And you really have to keep in mind that four-pronged strategy the chairman mentioned.
Good point. The changes in China with Shuanghui letting the European business run independently.
And, of course, the big one spinning off and listing Smithfield in North America.
Right. Okay, let's get into it. This report shows a year of, well, pretty big shifts for them.
Definitely. Very dynamic conditions across their regions, and you see different strategies playing out.
So let's start in China. Shuanghui development. The report mentions higher hog prices, but lower chicken prices. How did that shake out for them?
Well, it's interesting. They faced those pressures, yeah, but they were pretty proactive.
How so?
They focused hard on expanding their market reach, actually doubling their outlets, which is quite something.
Doubling, wow.
Yeah, and they implemented this thing they call a 2 adjustments and 1 control strategy.
Sounds a bit vague. Does the report say what those adjustments were?
Not in detail, unfortunately. But whatever it entailed, it seems to have worked, or at least helped. Their operation indicators were apparently stable despite all that external pressure.
Okay, stable in a tricky market. Let's jump over to North America then. Smithfield. Sounds like a different story there. Lower hog costs, higher prices.
Yeah, much more favorable wins for them. Hog raising costs dropped, and hog prices went up. A good combo.
So how did they leverage that?
Pretty strategically, it seems. They worked on optimizing their industrial structure. Notably, they actually scaled back their own hog farming operations a bit.
Oh, interesting. Less vertical integration.
Kind of. Seems like they focus more on the processing and packaged meat side, improving management, really driving down costs where they could.
And the results?
Very strong. A substantial turnaround in the pork business, moving from losses to profit. And, get this, record earnings in packaged meats.
Record earnings. Okay. And then came the big strategic move, the separate listing.
Right. January 2025, Smithfield hits the NASDAQ, ticker SFD.
What were the key details of that IPO?
So they offered just over 26 million shares.
Yeah.
That's about, 7% of the outstanding shares.
Okay.
Priced at $20 US per share. So WH Group, the parent company, netted around $534 million US in cash from that.
Significant cash injection.
Definitely. And alongside that, they also granted stock options and restricted stock units under a Smithfield incentive plan.
To who?
Certain eligible people, it says, including the chairman, Mr. Wan Long.
Right. So this IPO wasn't just about cash. It's part of that bigger strategy.
Exactly.
Yeah.
More independence for the North American arm. Unlocking value, focusing growth. That seems to be the idea.
Okay, let's round out the regions with Europe. Morlini. What was happening there? Different conditions again?
Yeah, sort of the opposite of North America in some ways. Hog supply recovered, and prices actually fell.
So how did Morlini handle that?
They seem to have managed it well. The report highlights effective epidemic control, always critical in livestock.
Sure.
Plus strengthened price management and pushing to expand their market size.
And did it work?
Looks like it. They saw profit growth across all their segments in Europe, led to a significant improvement in overall European performance.
Any specific drivers mentioned?
Yes, the acquisition of Argal. That was mentioned as a key factor boosting their packaged meat sales volume there.
Got it. Okay, let's zoom out a bit now. Look at the two main global segments. Packaged meats first. Sales volume was down globally.
It was, yeah. Down 3.0% overall. China saw a 6.1% drop, which they linked to lack of effective demand.
And North America?
Down 2.6%, possibly due to those higher prices impacting consumer buying. Europe, though, was up 8.0%.
Ah, the Argal acquisition effect again.
Precisely. But here's the interesting part. Despite lower volume globally, global revenue for packaged meats actually edged up 1.0%.
How did that work? Price increases.
Exactly. Price increases, particularly in North America, offset the volume dip. And in Europe, it was both volume from Argal and better pricing. Total revenue hit US $13,655 million.
And profitability in packaged meats.
Also up. Global operating profit rose 9.0% to over $2.2 billion US.
What drove that profit growth?
A few things. Lower raw material costs helped in China. In North America, they benefited from an employee retention tax credit and cost savings.
Okay.
And Europe saw a gain from, disciplined pricing, a better product mix, and, again, Argal contributing. So selling a bit less but making more money per unit. essentially.
Makes sense. Now, what about the other big segment, pork? You mentioned a turnaround earlier.
Yes, a really dramatic one. Global revenue in pork did decrease, down 4.3% to about 10.3 billion US dollars.
But the profit.
That's the key story. Operating profit swung from a loss of US $480 million in 2023 to a profit of US $356 million in 2024.
Wow, that's a massive swing. Where did that recovery come from?
Primarily, North America saw a huge turnaround. Europe also showed strong growth. Even China saw a slight increase in pork operating profit.
But didn't they process fewer hogs?
They did. That's the interesting part. Total hogs processed globally fell by 7.8%.
Why was that?
Well, China saw a big drop, nearly 20%, due to intense competition and weaker demand. And in North America, processing was down about 4%, partly because they closed a facility.
Yeah.
Europe was pretty stable, though.
So much higher profitability even on lower processing volumes. Better margins per hog, essentially?
Exactly. Efficiency gains, better pricing relative to costs, that kind of thing.
Okay, let's pull this together at the group level then. Key financial highlights for WH Group overall. Revenue is slightly down.
Just slightly, yeah.
Yeah.
Down 1.1% overall to just under 26 billion US dollars.
Yeah.
Mainly because of those lower sales volumes we discussed in both packaged meats and pork.
But operating profit
Skyrocketed. Up a massive 63.4% to $2,404 million.
And that was mainly driven by...
That huge recovery in the pork segment was the biggest factor, absolutely. But also the continued steady growth in packaged meats profitability helped too.
So that flows through to the bottom line, obviously.
Right. Their net profit margin more than doubled, went from 3.2% in 2023 up to 6.6% in 2024. Much more profitable overall.
What about their financial health? Balance sheet metrics?
Looking stronger there too. Their current ratio, short-term liquidity, that improved to 1.9 times from 1.6 times.
So better ability to cover immediate bills.
Right. And their debt levels look a bit more comfortable. The debt-to-equity ratio dipped slightly to 29.1%.
Okay.
And maybe more importantly, the debt-to-EBITDA ratio improved significantly, down to 1.1 times for 1.6 times. That shows they can cover their debt more easily with their earnings.
Lower leverage, better coverage. Sounds good.
Yeah, it points to a healthier financial structure overall. And it shows up in returns, too. Return on total assets jumped from 4.4% to 9.5%.
Big jump.
And return on equity more than doubled from 6.5% to 15.7%. So much better at using their assets and shareholder money to generate profit.
Okay, profitable year, healthier balance sheet. Now, how are they sharing that success with shareholders? Dividends.
Yes, seems like a clear focus on returning capital, especially after the Smithfield listing cash came in.
What did they announce?
Well, first, there was a special cash dividend paid back in March. HK Autos and 18 cents per share. That was about almost 300 million US dollars coming directly from those Smithfield IPO proceeds.
Okay, direct return from the IPO.
Then, in April, they did a special dividend in specie.
In specie? What's that?
Basically, distributing actual Smithfield shares to WH Group shareholders, or offering a cash alternative that was smaller, around 28 million US dollars worth.
Interesting way to distribute part of the holding. And the regular dividend?
They've proposed a final dividend for 2024 of $40 per share. That's a nice bump up from $25 the year before.
Subject to shareholder approval, right?
Right, at their meeting in May. If approved, the total dividend for 2024, adding the interim they already paid, would be HK $12.50 per share.
And how does that compare to 2023?
Significantly higher. It was HK $2.30 total in 2023. So HK $2.50 is a big step up, represents a total payout of around 825 million US dollars.
Quite a substantial return to shareholders. Any mention of share buybacks?
Not in the bits we've seen, no. Seems the focus, for now at least, is on dividends.
Okay, so wrapping this all up, how do you assess WH Group moving forward, based on this 2024 performance and these big strategic moves?
Well, 2024 was clearly a year of major progress. That profit rebound is significant.
Especially in pork.
Absolutely. And the strategic moves, particularly the Smithfield listing, seem designed to, as they say, unleash potential by giving the regions more focus and independence.
But they still face challenges, right? Competition in China, price sensitivity maybe in North America?
For sure. It's not all smooth sailing. They acknowledge those headwinds in different markets.
Yeah.
But the improved profitability and the clear commitment to boosting dividends, that paints a pretty positive picture right now.
That Smithfield separation really feels like a game changer, potentially.
It does. It fundamentally changes the structure.
So thinking about that, what's the big question you think someone following WH Group should be wrestling with now? What should you, the listener, be considering?
I think the crucial question for you to mull over is how this separate listing of Smithfield truly reshapes things going forward. How will the remaining WH Group focus more on China and Europe, allocate its capital now?
Mm.
Will they reinvest those IPO proceeds aggressively back into Shuanghui or Morlini? Will they hunt for more acquisitions? Or will they take a more cautious path? And how will these now more independent giants, Smithfield and WH Group, interact or compete on the global stage?
Yeah, lots of strategic implications to watch there. How does capital allocation shift? How does the relationship evolve?
Exactly. That's the big strategic puzzle to watch unfold, I think.
Great point to end on. So, to recap our deep dive into WH Group's 2024 report, we saw a company improve profits significantly, largely thanks to a pork segment recovery, even with some volume pressures.
And making major strategic changes, like the Smithfield IPO.
Right. Which, combined with increased dividends, signals a focus on shareholder value and maybe a more regionally independent future. Hopefully, you now have a clearer grasp of their segments, their financials, and these strategic shifts.
It gives you a solid foundation for thinking about their next moves.
Definitely. As you track the global food industry, keep an eye on how this restructuring plays out for WH Group's future performance and direction. Thanks for joining us on this deep dive.